Monday, March 24th. The week will start with the publication of the Purchasing Managers' Index, PMI, for the manufacturing sector of the European Union by S&P Global at 11 a.m. This indicator reflects changes in business conditions in the Eurozone's industrial sector for the reporting month. An increase in the manufacturing PMI indicates an improvement in market conditions and may positively impact the euro's exchange rate. At 11:30 a.m., the Purchasing Managers' Index, PMI, for the UK manufacturing sector will be released by S&P Global CIPS. It is calculated by market in collaboration with the Chartered Institute of Procurement and Supply, CIPS. An increase in the manufacturing PMI indicates an improvement in market conditions and may positively impact the British pound's exchange rate. Tuesday, March 25th. A day later, at 4 p.m., the U.S. new home sales data will be released. This indicator reflects the absolute volume of new home sales in the United States in monetary terms for the reporting month. An increase in this figure may have a positive impact on the U.S. dollar's exchange rate. Immediately after, the U.S. Consumer Confidence Index from the Conference Board will be released. This index reflects the level of consumer confidence in the stability of the country's economy and is based on a monthly survey of approximately 3,000 households. If the index rises above the forecast, it may cause short-term volatility in the U.S. dollar, pushing it higher. Wednesday, March 26th. Midweek at 12 p.m., the UK Treasury will release its spring budget forecast. This is the Chancellor of the Exchequer's second budget statement, typically issued in March, about a month before the start of the new financial year, which begins on April 5th in the UK. While this event traditionally attracts interest from economists and analysts, it rarely impacts the British pound's exchange rate. At 2:30 p.m., the U.S. Durable Goods Orders Monthly Report will be released. This indicator reflects the change in the value of new orders for durable goods received by U.S. businesses in the reporting month, compared to the previous one. An increase in durable goods orders may have a positive impact on the U.S. dollar's exchange rate. Thursday, March 27th. A day later, at 2:30 p.m., the U.S. quarterly GDP report will be released. It reflects the change in the market value of goods and services produced by the national economy in the reporting quarter compared to the previous one, excluding production costs. Most economists today argue that for the economy to function safely and stably, annual GDP growth should be between 2.5% and 3.5%. Immediately after, the U.S. Jobless Claims Report will be released. This indicator reflects the number of people who applied for unemployment benefits for the first time during the past week. A sustained increase in jobless claims over several weeks may negatively impact the U.S. dollar's exchange rate. Friday, March 28th. Ahead of the weekend at 1:30 a.m., Japan will release the Tokyo Consumer Price Index, CPI, excluding food and energy on a year-over-year basis. This index reflects changes in the prices of goods and services purchased by households in the Tokyo region. Higher than expected values are considered positive for the Japanese yen, while lower than expected values are seen as negative. Then, at 12 p.m., consumer price expectations in the European Union will be announced. The impact of this data release largely depends on the current economic situation. Excessively high inflation may prompt the European Central Bank to raise interest rates, which could strengthen the currency. However, in a challenging economic environment, rising inflation could further deepen a recession, potentially weakening the currency.